Alright guys, glad to have you on board again today. This is Wednesday and we're therefore going to update the regular flow vision and also general range strategy in the intraday timeframes. So here we go, starting with the S&P 500, our usual fellow, and you would notice now that we are pretty well advanced in this third and final flow sequence in here, still waiting for that third range boundary to happen. If we take out these technical signals in the nearby area, we start to see the first breakdown attempt. So this is kind of something. This hasn't happened for quite a while. We've tried to break higher for multiple occasions, and as you can see, the price is just literally not working anymore. It's so concentrated in a narrow price area to the point that if you zoom out to the daily chart time frame, you would see that we have a volatility alert in here, the squeezing alert. That means there is not enough volatility on the prices. That's what we've seen in the weekly update by the fact that the VIX is clearly underrated now. So topic for another day. Remember, we don't necessarily pay too much attention to this, but we always, of course, need to gather the information as they are. And we see that the context boxes are unfolded all the way up. So that's really a sign that we are very late stage maturity, compressed volatility. So you really don't want to be too aggressive in your understanding of the market there, okay? You could see a volatility burst, and that's not necessarily going to be the end of the world. Remember that you're always going to get a third range boundary afterwards to take your profits. What you need to be very cautious about is that if for whatever reason we reverse the context just mildly like that, and if we retrace to the third range boundary, also assess that there are likely possibilities for this to be a squeezed third range boundary. So if you see reversing the context, that doesn't necessarily mean the S&P 500 will be bearish immediately. Okay, remember that the third range boundaries can be broken through, and if that's the case, then that means we make a new high and we would eventually have to make a third range boundary at a later date. All that matters to us is that the third range boundary needs to be completed, needs to make itself on a fourth range boundary afterwards. I'll show you the example when we look at the crypto markets instead. Okay, so for the S&P 500, this lack of volatility tells you one thing. Of course, if you're in this flow, if you see the third range boundary, take your profits, but also be aware that if you're looking at selling this, that's not necessarily the wisest choice, okay? There's one clear thing you should be aware of is when you look at the Prezi manual. Remember that if you look at the third range boundary, so on this, sorry, this one is in French, okay? There are a couple of things you need to be wary of, okay? Like no squeezes on the price, okay? And that's exactly what we have, no squeezes on the higher time frame price. And you exactly have that. So if you want to trade the third range boundary, like for whatever reason you think you can sell the S&P 500, please don't, okay? The actual Prezi manual tells you you can't use the third range boundary pattern there. There's not enough volatility now, okay? So one thing for sure, you can still profit take on that third range boundary. You can't short it. Okay, so that's really important for you to set that difference. The Prezi manual says there's a third range boundary there, and this is where you profit take on these flow sequence. Remember, when there is a third range boundary, you need to get the hell out of here. That's the third and final flow, so you really want to be locking your gains, but don't sell it, all right? That's really important for you to set that difference. Okay, now for the crypto market, 4-hour reference in here as well, but we're in different sequencing because in here we're trading the second flow. And if we look at Bitcoin, the second flow is now terminated. It's been very long, okay, very, very long, highly volatile. As we can see, we've exploded into the Bollinger Bands in here. A huge explosion, huge volatile move in here. We see all the context boxes being fucked up. And now we're finally starting to have them all folded together. The thing is that we already see the third range boundary there, reversing the context, building the third range boundary and confirming it with the fourth. So we're really down to the end of it. So if you were trading the cryptocurrency flows, we've mentioned that by the latest update, we're due now for the end of it. And it's really have been that. So we're terminated the flows for the cryptocurrencies. We're in a 4-hour reference. This is the second flow, which means there is still a third one to come. And this one will come only by the Bollinger Band. So remember, we're still trading far higher than the moving averages. So for now on, there still seems to be a long way to go until we have the next trade opportunity in the Bitcoin market, okay? Now, one thing is for sure is that if you want to trade something else, like remember, there are multiple things you can do inside bigger ranges. You can flow trade and you can just dumb trade. And if you're that kind of thing, well, you want to switch in here, look at the time frame in which you have the moving average inside the context, either using the dashboard in here, or you just get your way into figuring it out, okay? Remember, for now, that means the H1 time frame is where the moving average is inside the context. That's the gray box in here, okay? So that's the way to go. I would be going there. Give it a second to plot. Okay, so by going there, yeah, indeed, I have my moving average inside the context, okay? And this is exactly where I can use the dumb trade strategy. Remember, the flow sequence is terminated, but you can still do hell a lot of things. So in here, for example, I would be using the dumb strategy, putting my Fibonacci's at play, and that's exactly how it goes. So as you would see in here, there was an easy third range boundary, or I'd say range boundary to trade. Very, very straightforward to do. This one in here, not necessarily going to be traded yet, but if we go slightly lower, you would have been straight into another boundary trade. Okay, so kind of easy to navigate. In here, you had a very nice dumb pullback, which is just basically, well, you go right back into the dumb zone and you pull right back down to the area in here. You're very close to the context, so this is exactly where you could have traded it. As you would see in here, where is my momentum? Come on. Really? Okay, here we go. So as you could see, no signals in here, so you would very less likely have traded this one. But that's really how it goes. This boundary was easy to figure out. This one is still coming, so be very alright. Be ready. Just put yourself a buy order in here, a limit buy, and that's just how it goes. Okay, don't make it overcomplicated. That's just how the nature of the beast is. If you want to do it on Ethereum, you would see kind of a similar pattern in here. If we look for the flow sequencing, give it a second to plot. Okay, same story. As you can see, far less volatility alert for the Ethereum markets. We see the reversing in here. Third range boundary has been built, very close to the third range boundary context, but not necessarily reaching out to it. But anyway, and all these targets to signal this 61% retracement. So just got closer, but not close enough. And that's really the way to go. Fourth range boundary has been built now, so we're pretty much done for Ethereum. So Ethereum for now as well, profit taken should have been triggered out of this area. You see the technical signals are not really crazy, so you certainly don't want to sell that either, okay? So it's just taking the profits for those who've been trading it all the way up and just saying same as Bitcoin. Next trade now for Flow Trader is going to be wait until the moving average neutralizes itself, get back into the context, and ultimately at the end of it, wait for the lower Bollinger Band to be tested, which is the next bullish entry in this flow sequence, for the third and final flow, of course. And in the meantime, same story out there. Figure out the time frame in which your moving average is inside the context, and you can dumb trade. For example, in here, that's the same thing as we did for Bitcoin. You go into the H1 time frame, you put yourself the Fibonacci levels out of the previous market top, and that's just all there is. Come on, no. Okay, I'll get it to work. All right, let's make it approximate. So that's how it goes in here, pretty damn simple. For example, in Ethereum, there is none of you for you to trade. Okay, you wait until the boundary has been made. You see in here, boom, down pullback was somewhat easy to catch. You had this breakout target. You got all of the things in here to eventually take this one. Profit taken in here, and that's all there is. For Ethereum, this is a boundary that's been tested already. Remember, below the context, inside the gray area, though Ethereum could already have bought yesterday evening, and now you're waiting for your profit taking in the meantime, and the maximum target is the opposite boundary, so you have a clean, neat selling activity at 38 in the Ethereum market. So as you can see, you can juggle it between the two. The flow sequence is now terminated, so all there is left for you to trade is this dumb trades, okay? And of course, remember that whenever the moving average gets inside the 4-hour context, you're going to have to adjust accordingly, which means when the range neutralizes the higher time frame, always trade on the larger one. So trade H1 dumb boundaries so long as 4-hour doesn't offer the opportunity as well. Whenever the 4-hour chart neutralizes itself as well, jump into this higher time frame. All right, so all there is for you to know, it's not overcomplicated. Don't make it overcomplicated. All right, last but not least, a quick look at the commodity markets. We'll look at silver. In here, we're going to have to jump on much higher time frame. The flow sequence in here is in the weekly chart time frame in this massively large range which we're in for silver. And basically all there is for you to know is this. Okay, first flow has been there. We can see the context moving above the moving average and so on. We see the delayed third range boundary in here, context to context, rebouncing and then falling. Okay, though we buy at the moving average and eventually at the Bollinger Band if this fails. And as you can see here, we are now attempting to break through the $26 level, which we've been waiting for quite some time to happen. So remember that we still have a lot of gas in the tank, but the next maturity stage for this flow sequence is going to be the confirmation level by breaking out the previous market top. Okay, so don't make it overcomplicated. It's just the way it is. Okay, we had the first flow, you couldn't trade it. We waited for the moving average or Bollinger Band following the third range boundary, and now we wait for the market to break out the previous high. And once it does, we get a second flow, which normally should pull out the context outside of averages and stuff like that. All right, so it's just going to repeat the same old story. So now, as you can see, the context has turned positive, which is great. The next thing we want is to break above the previous market top, and then we'll see the context moving above the moving average, which will be the confirmation that the second flow has pulled itself. We'll be able to put our stops at break even when that happened, and not until then. So that means if you bought this moving average, you should still be with a stop loss and patiently waiting for the market to pull its game. Okay, remember we've said we need to be very patient. A lot of retail traders were buying silver, which forced the market maker to play around and jiggle with volatility. You don't want to be shuffled with the deck. Okay, so we wanted to be patient. We're now patient. The market is attacking resistances. We'll see if that one is the right one to go, but it sounds like it does. So until then, weekly charts, so be very, very cautious with that. You don't really have to look at this market every week, okay? But that's really how it goes. And of course, don't be dumb enough to get out of here too soon because you think it's going too high, too quick, or whatever. The volatility is none of your business there, okay? So really account for what it is. We've done our job, bought the moving average, been very patient, let the market dive in. Okay, when it comes to WTI, in here it's still hard to figure out. Looks like we're in a quarterly range or so, and therefore that means the daily could be the actual time frame to trade on. So in this one, you've seen that there's volatility, so be very cautious with that. Don't be too aggressive with the WTI trade. The truth is, in here we see the first flow, very volatile in here as well. As you can see, the contexts are very fucked up. So it's kind of hard to trade out of this. I personally bought this moving average as well as the Bollinger Band, and I'm currently waiting in here as well for this market to validate the second flow. Okay, remember that might worry some people in here saying, yeah, what the heck, $150, $60, $200 for a barrel? That might be something very harsh. So once again, don't overthink things. We're trading intraday, which means intraday in here, but we're trading flows, which means don't try to overthink things. The market will go where it goes, and you don't need to drive it anywhere. Okay, so it's really follow the sequence, and that's how it goes. Okay, until then, well, the only thing that needs to be said regarding WTI is if you don't trade the flow sequence for whatever reason, okay, then you would trade the dumb range. Remember, the dumb range is the easier thing to do now, and the dumb range is now tradable in the weekly charts, okay? The moving average is now there, so that's the reason why I've been very cautiously telling you that you should profit fucking take your WTI on the weekly chart. If we ever go $115, that's gonna be a range boundary, all right? So be very cautious with that one, all right, folks? I hope you understand the message. Okay, so two things can be traded at once on the same asset so long as this is two different strategies. Okay, so remember, you can still trade the weekly flow, the daily flows, but you still gonna have to understand that there is a neat range boundary on a weekly chart, and you really want to understand what that means. That means you can trade both of these. You can still let yourself ride with the daily trades in the flow sequence, which will not be taking profits until we at least get above 128. Remember, this is where you put your stop at break even and let yourself ride the second flow, okay? But until then, in the same time, we have a dumb boundary trade at the weekly reference charts, and you could very well want to trade that one too. You can still have a daily chart going to the upside in the same time. You would have somewhat of an arbitrage position. You are both buying on one time frame and selling in another, okay? Both have different targets. Remember, the daily chart gives you, okay, wait until you get to all-time highs, okay? That's how it goes. Not necessarily all-time high, but you're going to have to break 130 to activate this flow. And until then, the bear trade is just a down trade, okay? It's selling in here, profit taking in the middle, and period, okay? The meaning here, you have a trade when you sell 114 and you buy again somewhat like 95 or so, okay? That's just the way it goes. Understand this, and you will be very good at trading, okay? That means the way you should see things is don't be confused by all these opportunities that might go in different directions. Remember that when you are trading ranges, you need to be dumb. You trade what you see, and even if it sounds like they're conflicting elements, don't ever go down this path, okay? Just trade both. Trade everything you see in a range. Every pattern that correlates to what you should do is something you have to do, okay? So that's how it goes. I hope it's getting clear enough to you guys. If you're still confused with range, that means you still have a lot to learn. And don't be harsh on you. It takes some time to get through this, all right? But the end of it is just that there's two ways to trade ranges. Either you try to get some alpha trades with the flow sequence, and you need to sequence the flows correctly. If you don't like that, and if you just want to dumb trade, because that's the easiest way to go, well, just do it, okay? Figure out the time frame, the largest time frame in which you have a moving average sitting in between the context, put your fibs, and trade dumbly, okay? That's how it goes, and you could do both in the same time. Even if they might be in different directions, you can still do both, all right? So I wanted to prove that to you guys today. So you could have traded flows in the cryptos, but now they're over and we need to wait. And in the meantime, you can do all sorts of dumb trade boundary stuff, okay? It's the equivalent for WTI and also as well for silver, okay? So that's all there is. You can trade both of these strategies in the same time. Just make sure they're well separated in your heads, okay? Both have different targets and risk managements, but you can do this, all right? One thing for sure is that if you trade two of these strings in the same time frame, there is probably a problem, okay? You can trade both of these strategies. Try not to do it in the same time frame, all right? That's all there is. But if this is daily and weekly, well, you can do it. I see no problems with that. Anyway, we're going to cover these trades through our regular updates, so we'll be able to figure it out all together. So we'll see where it goes. For now, I just wanted to point it out. See you guys later. Bye-bye.